Hi, Assalamualaikum warahmatullahi wabarakatuh. We are from Group 1 and our group is consisting by 5 members which are Nurul Emisha binti Muhammad Saidi 120239, Nurul Kristina binti Muhammad Zulkifli 1202401, Siti Nur Maknawiyah binti Mat Said 1202402, Raja Nur Izzatil binti Raja Anwar 122403, and the last one Nur Dayana Alisa binti Abdul Razif 1202404. So for our presentation, we have two parts. Part 1 is about our first group assignment. It's about Astro Berhad and we will discuss about its capital shares and cash flows. For part 2, it's about our second group assignment and we will discuss about question A and B including its answers.
Okay, Assalamualaikum warahmatullahi wabarakatuh. My name is Nurul Amisha binti Muhammad Zaidi, metric number 1202390. Okay, today I would like to introduce about the history of Astro Malaysia Holding Berhad. Okay, Astro Malaysia Holding Berhad is a public limited company founded in 1996 by Ananda Krishnan. It's already established its own satellite subscription service in 1996. Misat Broadcast Network System Sendirian Berhad on Astro, and then more Misat satellites were launched, allowing Astro to extend its service in 1998 forward. Rohana Roshan was named COO of Astro Malaysia in 2006. Following a successful takeover bid by Usaha Tegasedian Berhad, AAAN, which is Astro All Asia Network, was delisted from Bursa Malaysia Securities Main Market on June 14, 2010. The firm then was renamed Astro Holding Sendirian Berhad. Then also the firm was released on the Malaysia Stock Exchange in 2012. Okay, this is board of director of Astro Malaysia Holding Berhad. We start with independent non-executive chairman, named Tun Datuk Seri Zaki Tun Azmi, follow with senior independent non-executive director Datuk Leong Chia, independent non-executive director named Arenzo Christopher Vikas, and follow with non-independent non-executive director with 5 members, Lim Ki Kyong, Simon Chakat, Mazda binti Mukti, Kenneth Shane, and Rosanna Anita. Okay, we go to analysis from annual report. We start with capital shares. The first question is, what audit firm performed the audit of the company's financial statement? So this answer is, the audit firm performed the audit of the Astro Malaysia Holding Berhad financial statement is PricewaterhouseCoopers PLT. PricewaterhouseCoopers PLT performance have been evaluated by the company secretary. The evaluation took place in April 2021, evaluated by ARC, SLT, and self-assessment by PwC itself. Based on this evaluation outcome, the audit and the risk committee is pleased with PwC performance because they believe that PwC PricewaterhouseCoopers can demonstrate a strong challenge and skepticism. Then all the board agreed to appoint PricewaterhouseCoopers as the group external auditor.
What classes of capital share has the company issued? As a capital share class, Astro has issued common stock. The term common stock refers to a sort of security that symbolizes ownership of a company's equity. Other words that are similar to common stock include common share, ordinary share, and voting share. Holders of common stock have the right to a share of the firm's profits and can exert control over the company by voting in board of directors elections and voting on significant corporate policies. Owners of common stocks can profit from the securities capital appreciation. In comparison to preferred stock or bonds, common shares offer a larger return on average. The increased profits, however, come at the expense of the higher risk that such assets entail.
Okay, next. How many shares are authorized, issued, and outstanding? Okay, based on the article, Astro Malaysia Holdings Berhad did not have and not stated any authorized shares because they issue shares to the outstanding shares. Other than that, the maximum number of shares in the company which may be issued and transferred under the long-term incentive plan (LTIP) shall not, when aggregated with the total number of shares issued under the MSS 2012, which is exceed 10% of the total number of issued shares in the company at any point in time during the period of the LTIP. Okay, next, what is the value per share? Okay, for your information, value per share represents the current price of a company's shares, and it is the price that investors are willing to pay for common stocks. The market value is forward-looking and considers a company's earning ability in future periods. Based on Astro Malaysia Holdings Berhad, the value per share by the year 2021 is 0.80 cent.
How many shares are held as treasury share by the company? Astro does not have any shares held as treasury shares. Treasury, which includes cash sources and uses, working capital analysis, debt covenant compliance, vendor financing and loans facilities, foreign exchange management, and financing choices. What amount did the company declare in dividends on ordinary share in the current year ended? Dividends on ordinary shares are recognized as liabilities when they are declared, properly authorized, and no longer at the group's discretion or on or before the end of the reporting period, but they are not distributed at the end of the reporting period with the exception of final dividends, which are recognized when members approve them at the annual general meeting. Following the financial year, on March 25, 2021, the Board of Directors declared a fourth interim single-tier dividend of 50 cents per share on 5,214,506,700 ordinary shares for the financial year ended 31st January 2021, totaling 78,270,601 ringgit Malaysia, payable on April 23, 2021.
Next, what are the company's retained earnings? Okay, retained earnings are the cumulative net earnings or profits of a company after accounting for dividend payments. It is also called earning surplus and represents the reserve money which is available to the company management for investing back into the business. Based on Astro Malaysia Holdings Berhad, the group recognized additional impairment losses on its trade receivables of 767,974 ringgit arising. Based on Astro Malaysia Holdings Berhad statements, the answer is yes. This is because they could pay all of its revenue as a dividend, because stakeholders' dividend points out that a high dividend payouts is important for investor because dividend provides certainty about the company's financial well-being. Other than that, revenue reserve can be distributed as a dividend in the form of an issue of bonus shares.
Okay, move to the next question. What was the amount of net cash provided by operating activities for the current year ended for Astro? The amount of net cash provided by operating activities for the current year is 464,675. Then, what was the amount of increase or decrease in cash and cash equivalents for the current year ended? For Astro, the amount is decreased in cash and cash equivalents for the current year ended, in total of 6,044 ringgit. Next question is, what was the net outflow or inflow of cash from investing activities for the current year ended? Our group decided to calculate the net inflow. So we are referring to the cash flow statement of Astro in the column of company for the year ended 2021. Our calculation is written in the table on the right side in this slide. So we calculate the cash inflow, which is financial assets, net purchase or disposal of unit trust 79,056 ringgit, and then we add with interest received on advances to subsidiaries 2,430,
And lastly, repayment from subsidiaries 9,050 ringgit. So the total net inflow of cash obtained from operating activities in the Astro statement of cash flow is 90,580 ringgit.
If the company's financial difficulties are not handled, many wrong activities by management might end in a negative balance and even insolvency. Inadequate pricing of the corporation's goods and services is one of the reasons for a negative cash flow. When determining the worth of the items, all expenditures related to the firm's operations, such as staff wages, water and energy bills, must be included. Consequently, the defined pricing corresponds to the reality and scope of the firm. Therefore, continually update fixed expenditures and strive to optimize all critical corporate operations to avoid losses in internal processes and as a result, boost profits at the end of the month. In short, people and corporations alike have had a challenging year. Even though Team Astro has achieved significant progress in 2021, there is still a long way to go before they reach their goal of being Malaysia's #1 entertainment destination. Therefore, in light of the pandemic, Astro shifted its focus to facilitating virtual events and strengthening the loyalty of its customers during lockdowns. Also, Astro aspires to flourish and inspire others in their future endeavors.
In a commercial setting, corporate failure is fairly common and only certain businesses that adapt to the market survey. A company's operations are halted when it is unable to generate enough profit or revenue to meet its operational expenditures. Incompetent management, inefficiency, and weak marketing strategies are all significant factors. Economic expansion has been one of the most noticeable trends in recent years. The global economy is regarded as strong and powerful. Even so, evidence of the state's populations and surrounding enterprises deteriorating financial status must be recognized. Any company's financial management should look into the reasons of financial difficulty from both a microeconomic and macroeconomic standpoint. At the same time, businesses recognize the interconnection of these factors rather of seeing them as separate events. So, through the assignments that have been given, we are able to identify, research, and summarize the causes of business failure.
First and foremost, poor accounting practices may result in financial distress and company bankruptcy, as financial crimes could cause accounting errors. For instance, utilizing insider information or stealing another item will always be done to get a personal profit. Therefore, one of the primary reasons for ensuring that the organization has proper accounting systems is to minimize the risk of theft and financial crimes. Assume the firm intends to prevent employees from stealing both money and the company. In such circumstances, the organization's accounting records must be meticulous. If a business cannot review its financial records for abnormalities such as theft or embezzlement, it is likely to be deceived. Thus, this revenue loss may differ between survival and closure in a competitive market. As a result, if the financial records are not handled properly, it may threaten its existence.
Okay, next, the causes of financial distress that lead to the liquidation of a company is cash flow problem. If money is pouring in but not enough to pay the bill, the company need to plan a new strategy immediately. This is the sign that the company will be suffering difficulty and might be causing to the liquidation of the company. If this happens, the company need to get planned all over again and get well funded like some startup enterprise. Some of the most typical reason for a company financial resource being depleted include when the company expenses for overhead excessive. In addition, get a lot of debt and having to pay a lot of interest might be one of the causes of financial distress. Then other causes are having poor financial charges and get a lot of account receivable that have not been paid.
The factor that lead to financial distress is a company does not have a succession plan. When a company does not have a succession plan, which means the company lack or focuses on goals and has no adequate plan, so So this means that the company is very close to financial chaos. For example, if the owner die or become unavailable for the next few months, maybe for 6 or to 9 months, so who will take over the businesses? If a company does not have a succession plan, then will there be someone who is qualified enough to take over the business? So if someone who is not competent take over the businesses, it can cause financial distress, even though it's just for a while or it's just for a short period when the other person take over the businesses, but it can lead to liquidation of the company.
As a conclusion, as a good organizer of a company, as a conclusion, as a good organizer of a company, a lot of preparation must be taken to prevent from that situation happen to the company. As an example, a step that the organizer can use and prepare is try to focus on several points that could save them from having any financial distress. For sure, the need to focus on liquidity. It is because liquidity is more important than the revenue and profits. What we can say, liquidity is how much cash that the company currently have, as well as their ability to draw on a revolving line of credit. Other than that, they also need to focus on customers because customers are their priority and the main source of their cash flows.
Restructuring alterations or changes are made to an organizational processes as a result of a variety of factors, and they frequently affect how the business is performing. Change initiatives are those that alter an overall organizational goals, objective plan, or vision. Change happens all the time and it is unavoidable. Every organization undergoes transformation, and in order to increase its market position, they must adjust to that change. A variety of factors might lead to a shift in the organization. Understanding the components that can cause an organization to change is necessary for effective corporate management. Understanding what drives change helps a management to make better choices, allowing the organization to grow while lowering the chance of losing money. Through this assignment, we are able to identify various factors that influence changes in business structure.
Financial reason is one of the cause of changes in business structure, whether in an upturn or downturn. During an upturn situation, the number of growth, new acquisition, products and services will also increase. So this situation will lead the business to create new positions or departments to meet the increasing demands. Meanwhile, during the downturn situation, the company will enter into a survival mode, which means instead of planning for growth, new acquisition or products and services, saving would be the best. The company needs to start saving. If the company ignores this issue, then it will lead to financial crisis and changes in business structure. If the changes in business structure occur, then the company may need to reorganize their organization or restructure their organizations to coordinate activities as needed.
Ownership changes are crucial in developing a business structure. For example, ownership shift occur when a company is sold or a new owner is found. Also, the company's founder may decide to retire and sell the business. There are also situations where smaller firms may be taken over by larger ones who believe there would be more strong rivals by joining forces. Because of this, employees, suppliers, and customers are all impacted by the ownership changes. The organizational structure is often adjusted when a new owner takes over the reins. Consequently, departmental or office tasks may be rearranged because of management changes at all levels. Companies' organizational structures may be altered to better adapt to the external environment. This also includes where decisions are made inside the organization to be more responsive to the market, whether centralized or decentralized.
Okay, next, one of the causes of changes in business structure is economic changes. Business organization usually undergo change when the business fall or loses due to an unstable economy. Therefore, a reduction in manpower is needed to save costs and money for purchasing. At this time, good making decision need to make productively to add funds and raise the name of the business again. For example, back to the day when 2008 economics crisis is happening, many consumers had lost their income and their daily spending due to stable economics. Many employees have been fired since the economy is going down, and the company need to cut so many costs, and which had made the organizational structure also has a little bit changed. At that time, all companies were literally affected. The bank is no exception when they also go bankrupt.
For the conclusion, as a good and smart company, a wise and perfect strategies are needed to make sure that the flow of the company could be the greatest and smooth. Wise strategies also could help the company to prevent and avoid from any mistakes and failure. Based on these statements, there are a lot of steps that good company can use to make a better and good strategy. One of them is tactical plan. This step is like planning a strategic plan into a more detailed short-term strategy. The departments and functions in the organization need to do this plan to make sure their company could achieve their goals in the future. By this step, we can now focus on measurable results and communicating to stakeholders.